Good afternoon, everyone. Jason here. Today is August 18th, and this is your aftermarket update. All right, we had a good day here at the Oil Trading Group. However, it was not without its challenges today. In fact, I was one trade away from calling it a day. I'd had a difficult time. In fact, I took 4 trades today, and only one of those trades was a winning trade. However, if you've been following along with our videos and the way that we look at the world, we talk about maintaining the proper risk reward. We talk a lot about how if you can have a 2-to-1, 3-to-1, 4-to-1 reward to what you risk, then you can do a lot of losing and still be okay, right? So a lot of educators, day trading gurus, they will tell you things like we have a 75% win percentage, we have an 80% win percentage, and that's fantastic. And we could do that in here as well. But that is not really the whole story. What the story or the big picture for you, in order for you to be successful and consistent, at least the way that we see the world, is that your wins have to be bigger than your losses. So at a minimum, we ask that you try to get to 2-to-1. We try to get to 3-to-1, 4-to-1 when we can. We don't always win. No trader does. But what we do try to do is to keep that risk-reward profile in mind when we are in the trading room. One of the other things that we talked about in here today, you know what, before I go through that, I want to show you what I'm referring to here today. So here are my trader view statistics for today's trading. You can see that our total gain loss was 54 ticks. You can see that I won 25% of my trades. But what you look here is you look right here and you see what our largest gain was today. It was 1140. And our largest loss was $240. So if you look here, our average winning trade was $1,140, and the average losing trade was $200. So that is a 5.5, almost 6-to-1 risk-reward profile for today. One of the things that we talked about heading into this session here today is that this was going to be an expectedly difficult day. We talked about the fact that it was Friday, and that always provides some choppy conditions. We talked about that it was options expiration day. It was the last day actually it was the first day on the new contract. We were in the middle of contract roll. That is historically always challenging times to trade. But what you can see here from these statistics is that everything on here shows and talks about our philosophy, which is to cut the losers short. Average losing trade was $200. Let the winners run. Average winning trade was $1140. You can see that I was down 3 trades today, and the average trade was $200. So I was down 60 ticks heading into that final trade that I ended up with an $1140 winner, right? And so one winning trade erases 3 bad trades, and that is the philosophy in a nutshell that we try to train you on in here. One other thing that I talked about in the room today, and I'm going to let you listen to this. It's about a minute and a half, and I really laid out what the expectation was in terms of the way it was going to maybe happen today. I talked about the fact that we could be getting into a trade, we could be in an area that I think it's going to react from, and I could get stopped out. And then I could go in again, and then I could get stopped out and still feel comfortable because those stops were small to get in again and have it run in our favor. And I actually had this conversation 3 minutes prior to the open on the CL today. So I'm going to actually let you listen to that minute and a half conversation here right now, and then we'll come back on the other side and we'll talk about the trade that we got into. What you're going to see in here today is that I may get into a trade and it may work. And that's really easy. We all know how to handle that, right? We all know how to handle it when it works. That's not the hard part. What is the hard part is what may happen to you. You may get in, and I cut those losers short, taking a 10-tick or 11-tick stop, and then it comes back over my level, and I get in, and I take it again. I get some kind of confirmation that I'm looking for, whether it's through the order flow or some price action pattern, and I take it again. And this time it goes 12 or 13 ticks before it comes back and takes me out at break even +1, and you're like, dang it. So he took a stop, then he had a trade that went 12, 13 ticks, and he came back to break even +1. Well, I'm not going to take that one this time. Okay, you don't have to. You don't have to do any of this. Then I take it and you stand the way. And because I understand the way my system works and the probabilities and all of those kinds of things, That's the one that I then take and it rides for 50 or 60 ticks or 40 ticks times 2 lots, right? So that's the methodology that you're going to see in here. The one thing that I do ask, there's only one thing, is that you understand how what you are doing impacts your bottom line. For me, I like to hold on for bigger targets, 2 to 1, 3 to 1, 4 to 1 risk reward. That's what I like to do. So in retrospect, that conversation prior to the open of the market turned out to be fairly prophetic in nature, meaning that that was really what came to fruition in the room today. We were looking for opportunities to get long based on these choppy conditions. I say based on these choppy conditions, we were looking for the market to be in this choppy to sideways condition today, given contract rollover, options expiration, Friday trading, and that these were all of the things and ideas that we were looking for as we were heading into the session today. And really, technically, the market was in a fairly narrow range after the open. In fact, the open 47.42 and the low was 93. So that was about 49 ticks low to high at that point, which really is a fairly tight range for the CL. And so given the nature of that, we were looking to buy dips, sell rallies and buy dips today. So it took a bit of time to get our C legs underneath us here. So I'm going to show you this chart, and we're going to talk about this here for a second. So the first thing that we tried to do here is we were looking to get long. This sweet spot on a higher time frame measurement at 19 was our sweet spot long, and it didn't hold today, right? So we were trying to get in there, and that was the first stop out that we took, is in that area there. Then the market comes down to our daily structure signal, and we let that rotate around a little bit, and then we get long. I get long off of the daily structure signal, looking for a move up into the structure mid or the signal above, and then that opportunity didn't work out, and then I took one more shot at it once we came down here. If you measure, so if you look at this as an A to B, C to D leg, right? So this is A to B, a pullback, and then you have that C to D leg here. We hit the 200 extension down here at 02. And again, once we rallied back up, I was one more time long off the daily structure signal, just as I had told you that I would be looking for those ideas. If I still felt like that the market was going to be doing that thing that we were looking for, which in this case was for us to look up into that 50, right up around that 56 area today where the daily structure, market structure target was, then that's what we would be looking for. Market comes down. We try to get long one more time. So again, as I've told you, I took 3 stop outs in a row. I had one more opportunity because as we kicked the signal and looked to pay the target down here at 90, I was trying to get long at 91. The market comes down to 93. And what you're ultimately going to see me do is get in long here at 46.99. Remember that these ideas are being approached in the same exact way every single day, right? And so there is the consistency of approaching these in the exact same way every single day. And these are the way that these levels operate. So if you've watched our videos for any length of time, you know that it's not uncommon for us to hit 50 or 60 ticks on 2 lots, which is 100 to 120 ticks on a 2-lot trade. One final idea that we have here, if you look at this blue time frame here, we call this the 9 a.m. to 10 a.m. swing zone, and it's within this hour-long zone. Most days that the CL will give you some sort of reversal pattern that you're looking for, and in this case, the pattern looks like this. You have this market that's coming down into this zone, into a known support area or resistance if it's rallying. It comes down into this known support area here at 93. We were looking to get long 1 tick off of the daily structure target there at 91. And once this began to form here and we began to rally, I looked to get long at 99, 46.99. And we were going to hold, actually, we talked about holding for potentially at 68. But if you turn on this market structure up here, you'll see that we brought the target down to this overnight level at 56. And the reason for that is there was really no indication that we were going to be able to rally that high. If you turn on these secondary levels today, you'll also see that our fair value was at 98. Our daily pivot was there at 01. You had settlement up here at 24. These are all levels that ended up being important that also kind of factored into our decision. And then you turn on the revision signal there. It's right there at 98, 99. So once we got down into this area and got back over the top of the revision signal, that's where I was looking to get long. So again, these were the ideas that were manifesting themselves in the trade room today. Again, I can't stress this any more than I am right now. The market gives you feedback. We did not flush out of this area. So my idea for long today was still fairly intact all the way down to 90, this structure target down here at 90. I get in at 91, and the market then begins the process of going up. And you can see here that the market just continues to rally all day long. So not only did it take out that 56 level that we had here, which was our target, right here at 56, it went on into 68, and then really just all the way past market structure extension 2 and just rallied for the balance of the day. Had I known, obviously, we would have tried to hang on to this a little bit longer. But the point of that is this. We did not bail out of our idea. We had an idea on the day where we thought was going to be happening. The market was telling us maybe not, maybe not, maybe not. And then, boom, we hit the one trade. The average trade, the average loss on 3 trades was $200. And as I showed you before, the one winner was $1,140. So that is how we ended up with a 54 tick positive day. So I've taken today's trade of the day. I have split it up into chunks, sped it up. It's about an hour and a half long. Sped it up and put some music behind it so you kind of get a flavor for it. So I'll let you hear the entry, and then I'll let you watch it as we go from the initial entry. Then I'll let you watch when we get to break even, and then I'll let you watch the final few minutes as we blast off into the target. So having said all of that, without further ado, here is that OTG trade of the day. To 99 on the entry. 99 is the entry. That might have been close enough. The target right now is 56. Your target is 56, and your stop here is 84. So you see that the market rallied very aggressively there towards the end of that trade. But again, that was a little deceptive on the length of time. That trade lasted well over an hour today. And it did finally, once it finally got through settlement, and that's an area that we were talking about today there at 24. Once it got through settlement, we were going to look for that thing to rally up into 56. Again, all indications prior to that point, though, is it was going to be a very long walk into that area if it got there at all. But, of course, the market really quickly exploded up, took out our target. So, again, kind of bringing all the pieces here together today. Before we started the session, we talked about the fact that we were going to be looking at these choppy to sideways conditions, and it could be a difficult trading day. Then the first part of the trading day was difficult. But we are persistent about holding on to our targets and the way that understanding the way that our system works and the way that our levels work and what our expectations are once certain things are achieved. And then we go from there. And of course, the market really did fulfill our ideas today. So again, a couple of losing trades up front, small losing trades at the beginning, and then one really large winning trade to end the day. So that is the methodology in action here for us. That is a really good synopsis of what we try to do in here. Obviously, we don't want to lose trades leading into that, but that is not the reality of trading. The reality of trading is that there are going to be losses. But if you can cut those losers short and let the winners run, then you are going to be okay in the long run. So, again, as always, I want to say thank you for watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trade.